What's going on, my friends? Chris here. Want to bring you all an update today. This is something that I've been working on for a little bit, and it's 7 things not to do in the cryptocurrency space. And I've put this together from my 5.5 to 6 years worth of experience in the crypto space, and I really hope this is going to help you save some money or make some money in the long run. These are some things that I've dealt with in the past before, and I've learned from them, and the fact that I've learned from these things and I don't make some of these mistakes anymore, it's just really helped me throughout my trading career. So if you guys are interested in this, don't forget to like, subscribe, hit that notification bell. Want to help teach you as much as possible. We'll learn this stuff together. So number one, not waiting for the candle to close. This is a big one here. So there have been times when you're looking, guys, you're going, okay, it's going to be a big bullish engulfing candle, or it's going to be, a big bearish engulfing candle, and there's still 20 minutes left for the hourly close, or there's still, an hour left for the daily close, and you go in anyways, and you say, all right, this can be a bullish engulfing candle, and you jump into that, and by the time the candle actually closes, it may not be a bullish engulfing candle anymore, or a bearish engulfing candle. So it's something that you have to be extremely careful of. You can see even right now, Bitcoin on the 1 hour time frame right now, what we're looking to see is if this is going to be a bullish engulfing candle on heavier volume here. So we had some buying pressure come in, and that's right at around $16,400, and we're going to have to see here in the next 5 minutes or so how this candle closes. If this is a bullish engulfing candle, then we can go up and attack some higher levels. But right now I'm just having this on in the background, guys, just watching Bitcoin, watching the price on the 1 hour time frame while we look over some of these things. But you always want to wait for that candle to close to have that confirmation. So that's number one. Number two would be not sticking to a time frame for a trade. So say you enter a trade and you entered on the 1 hour time frame, and you're looking all over the place. You're looking at the 30-minute time frame, you're looking at the 5-minute time frame, you're looking at the weekly time frame. It's going to mess with you guys. What you have to do, you always want to start with the monthly time frame on the charts. Look at the monthly, look at the weekly, look at the daily, work your way in. In my opinion, for cryptocurrency, you want to be trading on the daily chart or the 4 hour time frame, or even the weekly time frame if you're a little bit more longer term. But in terms of looking at the 4 hour and the 1 hour time frame for those swing trades, I think are going to be the best for you. But really keeping an eye on those and having your entries and your exits on one time frame. So if you entered on the 4 hour time frame, you're going to be wanting to exit on the 4 hour time frame. If you exit or your entry was on the 1 hour time frame, you want to exit on the 1 hour time frame. You don't want to be all over the place where you're exiting. You entered on the 1 hour time frame and you're exiting on the 1 minute time frame. You don't want to be doing that. You want to stick to that time frame, and as you're doing analysis, always start from the monthly and work your way in down to the 1 hour time frame. It can really help you out. Number three, not using a stop loss or not sticking to your stop losses. So guys, for a trade, you always have to stick to those stop losses because it's about the risk to reward. So one thing you can do, you can go over right in this area and you can put a long position in. So just to show you guys, this is not something I'm taking, but just to give you an example. So say in the next 3 minutes we close this, say bullish engulfing candle, you say, hey, I think we're going higher. You jump in here, you put this, and you say, all right, so my stop's going to have to be below this candle here. I want to give it a little bit of wiggle room. We'll go in this area. You always, in my opinion, want at least 2 to 1 or the 3 to 1 risk to reward ratio. So if we go up higher here, say we target the 200 moving average on the 1 hour time frame, that's still only a 1.19. That's not a good risk to reward ratio. Say we were looking to target up in this area here where we started this hourly downtrend, then we would look at, a 2.56 risk to reward ratio. For me, this is not something that I would want to take on the 1 hour time frame, trading below the 50 moving average and the 200, just to give you an example. And you'd have to see how high we'd have to go up just to get that 2 to 3 risk to reward ratio. So for me, I'm not looking for something like that, guys. I like when we really have a good risk to reward ratio and that stop loss can be tighter, it can be closer to me, because right now this is giving up probably about a percentage or more just to the downside here on an hourly time frame. So if you're setting your stop, you're at least a percentage below that right now, trading on the 1 hour time frame. And a lot of these bounces that we've been getting here, give you an example, haven't been that large. That's about 1.17%. So what we would need to do on something like this, when you're taking a look at it, we would want to see us come back. We have room now to try to set a higher low and then try to get up through that. And if you did take this down in this range, then it would be closer for you and you could put your stop loss underneath. So that's something that can really help you guys, the risk to reward ratio. It's a big deal, and you always want to measure it before you take a trade. Next one, not focusing on Bitcoin, more interest was in altcoins. And this was something that I did wrong in 2017 when I was first getting in. I saw Bitcoin, it was $1,200. I was like, man, I missed the boat. I got to look for something else. So I'm looking for all these altcoins, Ethereum at $200, Litecoin at $30, this and that. And you think, man, I can get so much more. But at the time, I did not realize that Bitcoin's the driver of the market. It usually starts the bull markets, and then the altcoins would pick up. So you always want to pay attention to Bitcoin. When you're looking at altcoins, you always want to do your charting analysis off of Bitcoin. Bitcoin's the most important thing in this market, and you got to keep your eye on it. So always remember that. Next one is going to be jumping in and out of positions too often. So this is something I struggled with before. I'd have a nice position, I'd jump in, have a good entry, it's going my way, and I would take my profits too soon because I would be afraid to just let it ride. I didn't want to give up those profits, those paper gains. But in this space, guys, you really have to let the trend do its work, and a lot of the big gains are in those big swings or those big trends. So really putting your stop loss in, sitting back, patiently waiting, and let the market do its work. Because if you're jumping in and out, you could miss some of those big moves. And in Bitcoin, many times it'll come on like a 1 hour candle. You'll have these massive moves to the upside or the downside. Then you spend a ton of time, hours and hours, chopping sideways, and you can't really do anything. So you kind of have to be in as the move's taking place. And that's where you can get lost. If you're just jumping in and out, you could be going to sleep, and all of a sudden the big move takes place. So really trust those stop losses. It's not like the stock market where they'll gap and all of a sudden, you don't get stopped out. This is a 24-hour market, and that stop loss should trigger. So that's a good thing for us here. So not jumping in and out of positions. Once you have a good position, let it ride the best that you can until you see that major resistance coming up. Next one, trade on spot. And the reason why I say this is because crypto is volatile enough. You don't need to be doing a bunch of leverage, blowing up accounts. You just need to trade spot, in my opinion. That's essentially what I do, and that's worked really well. I mean, guys, this space, we're down 75% on the year for Bitcoin, so there's plenty of volatility, and I just think spot's the way to go so you don't get liquidated and blow up your account. The next one I have for you here, and this is going to be the last one I'm going to get into, I want to make this video quick, is let the trends work for you. We touched on this a little bit earlier, but really sitting back and letting the market do the work for you. You always think you need to jump in and out of trades, guys, and that's not the case. The market, it's like a big ocean or a river, and it has these currents. And roughly about 30% of the time you're going to trend, whether it be up or down. The rest of the time you're really just going to chop and move sideways. But when these trends are moving and you have a massive downtrend, you don't really want to fight it, trying to swim against that current. You want to swim with it, and vice versa. When we're really moving strong to the upside and we have that good confirmed volume, that's not the best time to be going short and trying to fight that. So really, if you are shorting, go short when we're in those downtrends. If we're long, you go long in the uptrends, unless you're playing something special. Guys, putting super low limit orders down, trying to catch some wicks on a capitulation flush. That's a whole different game. But mostly you just want to follow those trends so that you're not fighting the trend. And that's when the whales can run over you. So just be cautious, be careful out there, guys. These are some of the things that I've learned so far. I hope to do more videos like this for you. God bless. Take care.